Hi, this is David with the Enzo Trading System. This is going to be a quick performance review for the, a recent performance of our system in these difficult markets. It's actually going quite smoothly, no issue at all. In fact, the best month for us has been this month, June, even though the market going quite poorly for most people, I guess. And yeah, that's what it looks like right now. Bitcoin, big dumps, a lot of dumps, a lot of crypto. But of course, last month we introduced the short size strategies, and we took full advantage of that. Our reference fund started the year at plus 20%. Now we're at plus 21%, 91%. Of course, this will fluctuate. Maybe it will go down from this point on once the market changes direction, and then it will go back up again. But so far, so good. I don't think we could have done any better, really. Yeah, the short side strategy is missing I mean, the realm of opportunities is quite large, but as I mentioned previously in a previous video, our short side strategy is fairly new, and so we decided to tune it to be safer rather than more aggressive. So in the case, for example, of the Bitcoin, we did do a nice plus 13% going down a few days ago on the 13th and 14th, last week basically, to be multiplied by leverage. So I think at the current fund we do have, yeah, here it is. It was basically plus 52%. Of course, on the whatever portion was allocated for Bitcoin, I think it was around 25% of the fund. That's due to the portfolio management. And yeah, I mean, there was a lot of room to do more. For example, this trade was from 25,400 to 22,000, but the system didn't. Previously had another short that closed at 27,900, and that didn't open until 25,400. So there are gaps. It's not as aggressive as on the long side, but again, this is due to safety. And perhaps I can show in detail here what our prediction, the main prediction indicator, which is something we developed in-house, looks like. It twitches quite a bit, but basically recently it's looking like it's thinking that the market is going to bounce up, and it's been thinking so for a while, and that's the reason why no short positions were open from this what is it, 2263 all the way to even when it touched 17,500. Again, it's better to be safe, and I will show in a little bit actually that the short side is not really that profitable, but it is profitable nevertheless. So I'm really happy. I think I mean, I wouldn't trade with any other system or give my money to any other person right now. First of all, we didn't lose any money basically in the recent months, all the way down. I mean, of course, ups and downs, but overall was a profit. Before we introduced shorts, we were about plus 50% or something. Now we continue to make profit. And yeah, I mean, it also makes sense as developers of the system, of the algorithm. We can see that it's working as we expected, that is matching the backtests. That's really gives me additional confidence. But you know, I shouldn't say too much, because every time I make too big of a claim, the market is going to throw some surprise. But so far, I think it's really great. Next, yeah, we looked at the market Let's see how it goes. Maybe it'll bounce back up. Oh, I should mention one thing. We do have this reference page that shows in real time of the fund. The total is exact, the starting is exact, and also the profit is also accurate because it's based on current numbers. The monthly breakdown will fluctuate a little bit. This is due to the fact that Luna was removed by Binance by Bit. So, and the calculation of the monthly breakdown, we need to review it. I actually worked, I fix it, then it breaks again. So I think I actually have the proper one breakdown that comes straight from the server. It's a bit different, like March was barely a profit. But again, this doesn't affect the actual performance, the final performance, which is exact. Just the monthly breakdown may be changing. And also, I guess from the server, we also get the nice profit curve, which is from the start of the year 2022. As usual, a little bit of a drawdown and then back up, a little bit of drawdown and back up. Perhaps next we'll have a little bit of drawdown and then hopefully up again. This is this. Now, I also would like to show back tests regarding that we do periodically. And this is the back test based on multiple markets. So we simulate the whole trading, let's say, experience with the current algorithms, starting from the year 2020 with the 19 markets that we trade, although Luna nowadays is dead. And then we see the final performance, what it would have been if we had the current algorithms and the current portfolio management from the beginning of 2020. And of course, the portfolio management, this tool basically, it's in itself, it aggregates all the trades of simulated trades, backtest, or all the markets, and then it applies portfolio management in a walk forward fashion, which is very important. It doesn't optimize after the fact with the known performance. It simulates adapting the portfolio, allocating different amounts to different markets, always based on previous month's performance. So that's what makes backtest more realistic than one that doesn't do that. But yeah, this we have here the latest performance assessment, and from 2020 with long and short would be 30 time profit, and this is without leverage. So with only about 11% maximum drawdown, and he makes for 263 a profit over maximum drawdown, return over maximum drawdown, which is one of the main parameters, results that we look for, because as usual we want to know how much profit did you make, but also what was the risk you incur into, and this kind of tells you how much leverage you can use. If you have a lot of profit but also a lot of drawdown, then you cannot use leverage. So it's really you can't really make that much. If you have a tiny maximum drawdown and the moderate profit, then perhaps it's more convenient because you can use high leverage. That's the whole discussion. So, and this is, yeah, the simulation. Another thing that I really like, since we introduce a short side strategies, we also supposedly we shouldn't get any too many down months. In the simulation, we only have 4 down months when using the combine long side and short side algorithms. If I go here and I set to simulate only the long side, it takes a few seconds, and then it's quite a few more months, like 8, 9 negative months. Of course, what really matters in the end, it's, yeah, the profit and the maximum drawdown, but also it's a good indicator to know that you don't have too many down months. It means it's more stable. In the case of long only, I would like to highlight the fact that yes, you do get less drawdown because of course it's less activity, but also less profit. And if one sees the relation between the return of a maximum drawdown, it's a bit worse, from 263 to 188. So this kind of tells us that it's better to have the shorts. It's kind of a confirmation. Of course, how you reach these values, this is still a back test. It's based on prior knowledge. As much as we do the back test in a walk forward fashion, at the same time there's always a human element of optimization. It's never 100% reliable to look at the past history, and there are other things, other details, but still, but that's why also we tend to show nowadays only live trades rather than too much of these back tests, because this is kind of internal stuff. It needs to be interpreted. Also, you can show the short only, and in this case performance wouldn't be that great, only basically plus 83% for 2.5 years, and a maximum drawdown of 10%. So really tiny performance short only. This is due both to the fact that, of course, our short algorithms are not as evolved. We only put a fraction of time into them. And also, in general, it's easier to make money on the long side because markets on the macro level, they tend to go up. If they don't, they're probably already dead. So there is that kind of survivorship bias kind of a point of view that needs to be considered. But yeah, when we put together the long and the short, of course, we get the best profit and the best RMD. Another thing I would like to mention is that we shifted the portfolio management. So what this does, this portfolio management that we currently using, it looks back at the performance of each market, market, as far as our algorithms perform on them for the past 3 months, and then it uses a criteria, which in this case is Monte Carlo simulation divided by the maximum drawdown. A Monte Carlo simulation is a statistical approach that basically, in our case, it takes an initial sample of trades that the algorithms would have performed, and then it builds kind of a random pool of alternative trades, and then based on that, it decides whether randomness would have been better than the algorithms. The better the algorithm would have performed compared to random trades, the more one can rely on them. I think it's a neat statistical approach. It's very widely used. It's generally, if it's not used, it's because it's considered to be quite brute force. In fact, when I click and change here, change some parameter, it takes a few seconds to recalculate everything. Still acceptable. We had to do actually some optimization only to be able to use the interface, otherwise it would have been too slow. Of course, we have other, I mentioned this in previous videos, there is other criteria that we can select for, but the Monte Carlo so far has been working generally better. Any of those criteria will definitely help. I mean, having a portfolio management overall helps. And again, this is integrated in our system. The user doesn't really have to worry about anything. But of course, you want to select the best one. So anyway, I can got drifted away a little bit there because definitely very interested in this, and I could talk for hours perhaps about this. But yeah, the gist of it is really we're doing really well. We're kind of happy with the performance. I don't know what can go wrong next. Hopefully USDT stays alive. And other than that, I don't know. I mean, if you're not trading with us, you probably 99% you're doing perhaps you're doing better, but only for a limited time. I honestly don't believe any other trader, any other system. There's so many things that are out there. I think everything else is overrated. We'll see. But yeah, I shouldn't sing my own song too long now. That's it. Yeah.